Hello everyone, welcome to a new weekly concept video. So today I wanted to make a special episode dedicated to an indicator that's getting a lot of attention now, and I just wanted to share with you all how I use it, what it is, what different types we have, and how this can be a great addition for Confluence in your trading strategies. We are talking about the VWAP indicator, volume weighted average price. So let's dive in and just look at what the definition and types of VWAP are. If you haven't done so yet, make sure to subscribe, hit thumbs up and share. And so let's start with the basic definition. So the VWAP is a trading benchmark used by traders that gives the average price a security has traded at throughout a set period based on both volume and price. So it looks just like a moving average, and you can think of it as a moving average, but instead of only relying on the candle close values to calculate it, VWAP is also taking into account volumes in its formula. So it's going to place more importance on prices where more volume was traded. And as we know, especially if you're into order flow trading, volumes is a key component into all these strategies. So the VWAP is important because it provides traders with insights in both the trend and the value of a security. So for example, large institutional players use VWAP ratio to help move into or out of securities with a small of a market impact as possible. Because as we know, those type of traders have really large positions. They cannot just execute them all at once, or they're going to completely distort and move the markets and get inefficient fills on their orders. So they'll break up their orders into smaller pieces, and they use VWAP as one of the tools to help them see when a security is considered to be overvalued or undervalued. So basically they will try to buy below when it's considered undervalued and sell above when it's overvalued, basically trying to just get back towards the average and not away from it. So you can think of VWAP almost as a point of control on the volume profile, which is the area with the highest traded volumes and what's considered fair value. Traders can also use VWAP as a trend confirmation tool. This is how I mostly use it in my day trading, to go with momentum. So basically when price is above VWAP, we may prefer to initiate long positions because momentum and volumes for buying are in control. So we are trying to go with the prevailing trend at that moment. And where price is below VWAP, then we may prefer to initiate shorts because we can see that the selling volumes and activity are stronger at that moment. There's four main types of VWAP. The one that I think is the most useful in my case for my intraday trading, specifically in the futures market, but you can apply this to any market, is going to be the session VWAP or daily VWAP, depending what markets you trade. And this is good for intraday trading. So as you can see, basically this is a Euro US dollar 5-minute chart. At the start of each trading day here, VWAP just starts right at the opening price of that first candle for that day. And then as prices start getting more activity, more volumes, you can see how, just like a moving average, VWAP in this case gives us a nice trend following indicator that we can use to help in our trading decisions. And you can see here we almost touched it, but it held, and this indicates we are above VWAP for most of the day. This was a strong uptrend day, and so then you can use that in your trading decisions, in this case to go long on the market. Other days, for example, here you can see how we dip below, we rejected it a couple of times, and then finally we had a decisive close. This was a shift in momentum for the day, and then you can see how we spent many hours just trading above VWAP in this impulsive move, came back and started holding it. You can see what I refer to here. This is considered fair value around VWAP, so a lot of times you're going to get this choppy behavior, and then we dipped below, and that just started a downtrend for the rest of the day, and so we are below VWAP. You can look to start taking trades more to the short side, and obviously, you know, we're going to guide ourselves by market structure, price action. I'll use volume profile. You can see here how we clearly broke a support level, broke another support level, and so this just acts as confluence, and we are below VWAP, and so you can use that to help yourself in your day trading. So if you go on a chart here, for example, this is a Bitcoin chart, 15 minutes. This is a session VWAP indicator and trading view. You just go to indicators, type VWAP. You got a bunch of different ones here, plus user generated ones. I have a few that I have marked as favorite. This is the standard trading view indicator for VWAP that I have. Basically is going to be a VWAP of the just the day session here. This is the chart VWAP. You can change settings here. You can adjust things as you want, but basically in this case you have a 24-hour VWAP from start to end in crypto. If we go into Forex, for example, pound dollar, obviously if you're going to use this for day trading, you're probably going to be on a low time frame, like 5 minutes, 15 minutes, and you can see how every day you just get a new VWAP starting right on that first candle beginning the day, and then just goes from there. In futures on TradingView, unfortunately, you cannot split VWAP when it comes to sessions. What I like to do on TradingView, specifically for futures, is I'll just go and take their anchor VWAP tool, and you can see here, this is the start of the evening session right there. So you can use a VWAP there, or what I do is, especially for regular trading hours, I'll just go to 9:30 a.m. when the stock market opens and anchor it there, and you can see how now you can have a VWAP specifically just for the regular trading hours if you are in the futures market. Or if we go into Sierra chart, I have this here where I have it specifically split by sessions, and so you can see here how at 6 p.m. Eastern Standard Time I have my extended trading hour session with its own VWAP, and then at 9:30 a.m. Eastern, when the regular market opens, the new VWAP starts here, etc. Okay, and so for my day trading, I use VWAP, like I said, as a momentum trading tool. You can see on days where the trend is not that strong, you tend to just gravitate back towards VWAP, but once you really get momentum going, price will just not come back to the standard mean VWAP. And you can see how you get very nice retests on it. Cases like this, you break above, you can get a test and you go. Here you break above, test, and you go, etc. So, you know, this is all part of techniques that you can develop using VWAP. Now, why did we say earlier that we don't want to just assume that price is always going to come back to VWAP? Well, because once you get days like this was a regular trading session where we basically went down the entire day, And so you can see how price had just one retest of VWAP from below, and for the rest of the day we did not get even close to it. So anyone that was just trying to fade momentum and buy to go back towards VWAP got completely killed here. So this is where I say the best technique you can use is just use this as a trend following indicator, where if you are below VWAP, then you're just looking for opportunities to short. Here, for example, we went sideways, broke below. Over here, we make a little consolidation, broke below, and then we had a nice retest, continued down, etc. I'll show you in a second how you can use deviations on VWAP to help you trade this strong trending days. The next type of VWAP we have is just the rolling VWAP. This is good for swing trading and trend following. Pretty similar to a moving average. You just select a specific period and it's just going to give you a VWAP that is just continually rolling over. So if we go here, there is a rolling indicator here on TradingView, which I have here. Let's erase this and let's go up into a bigger time frame. Let's go into the 1 hour. And so you can see here how it says here this is a 1 hour rolling VWAP, but here you can just change it to whatever you want. Let's say you want a 3-day VWAP. You just put that and basically you're getting a VWAP similar to a moving average that just doesn't, it's continuously across the entire chart. And in this case, it's rolling over periods of 3 days, taking into account, like we said, closing prices and volumes. And you can just, adjust to whatever periods you see fit for your trading style and your time frames. And then you can just use this to help you as a trend following tool. Then next to that, we have anchored VWAPs. So this VWAP just ignores times periods and instead starts at a set point on the chart. It's mainly used for big swing points. So we have here an example, the S&P 500 daily chart. This is anchored at the bottom of the pandemic crash we had in March of 2020. So if we go into a chart here, let's just go into the S&P chart. And zoom out. Okay, so we have here, basically this was the COVID pandemic crash that we bottomed on March of 2020. So you just go to your indicator, select anchor VWAP, and then you can just put it here and it'll just throw you a VWAP going from whatever period you select all the way to the end. So this type of VWAP, I don't personally really use this, but people use it especially at big inflection points like this, at extreme high and lows, and then it just helps them, like we said, get a good sense of values in terms of volume and price from a set point in time. And then we have periodical VWAPs. So this is just VWAPs that you can set at specific points to start every week, month, quarter, year, etc. Good for swing trading and also for following trends. So you can see in this image, this is a Bitcoin 4-hour chart. All the purple squares are basically the start of a new week. And the light blue line here is a weekly VWAP that you can see just resets itself every Monday. And the dark blue line here, marked with the orange squares, this is the beginning of a monthly VWAP. So this is the start of March, and we have our line here. This is the start of April, and you can see it starts right at the monthly open. and then just starts going on from there. So these are useful, like we said, as trend following. So for example, here you can see we start March. The thing with the periodic and rolling VWAPs, etc., even the daily ones, it's, at the beginning it doesn't really give us any real good information because we're just very close to it. But you can see how this monthly VWAP, once we were around here, like around the 17th, 21st of the month, now this is really taking into account all these volumes and action that we've had for weeks now. And you can see how, for example, here we broke out and we had two very nice retest opportunities off the monthly VWAP to go with the upside momentum and go long, and then just follow the trend here that we had in the coming weeks. For example, same scenario here. April started here. We had a little uptrend. We held VWAP. Once we lost it, then this was where we could start looking for swing short opportunities. Obviously, we look also at information on the chart. We can see we had this swing low that we broke. Market structure shifted downwards here. And then you can see, for example, later in the month, around the 23rd of the month, we had a very nice backwards retest and rejection of VWAP to go short off of. Okay. And so now let's finish off with just mentioning VWAP deviations. So just for example, like people use Bollinger Bands to see where price might be overbought or oversold, and we might expect a mean reversion into the mean. You can use VWAP deviations in this similar fashion, where you can have your main VWAP, in this case is the big orange line, and then you have 1 and 2 standard deviations. I mean, you can put as many deviations as you want, but I found I only use pretty much the first and the second. These are by far the most likely to be hit. On very strong trend days, you could even maybe hit the third, but I think first and second is what I mostly use. But you can see how price will usually respect these deviations pretty well, and not only use, so you can not only use them as targets, but then also price, if we have a strong breakout off of them, then we can start using them as retests, either to go back into VWAP or into the next deviation, etc. And these ones are especially useful in strong trending days. So if I go here back to Sierra chart and I have my session VWAP with the first and second deviations, you can see how when we start getting strong trends, price will usually hold between the first and second deviations. Like you have this day here where we had this monster dump on the whole regular session. You can see how pretty much price was in like an envelope between the first and second deviation and just stayed there all day long. So this is very useful. When you see days trending, you can obviously use momentum to make sure that you are either going long or short, depending if you are above or below VWAP. But then you can use your deviations as well to just help guide yourself as to, places where you can take opportunities to scale in, scale out, add into positions, etc. Okay, so that's pretty much all the different types and uses and definitions that I use for VWAP. Again, this is just a very brief introduction. You can go very deep into this topic, but I just wanted to talk to you all about the indicator and show you how I use it as a Confluence in my own trading strategy. If you have any questions or comments, leave them down below. Make sure to subscribe, share the video. We are close to 1,000 followers, so just keep thanks everyone for tuning in and sharing and retweeting and liking all the videos, and I will see you all in the next one. Take care.